Ladies and gentlemen, good day and welcome to the Hitachi Energy India Limited Q3 FY23 Analyst Conference Call. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star, then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. N. Venu, MD and CEO. Thank you, and over to you, sir.
Thank you, Aman. Good evening, ladies and gentlemen, and thank you for joining us. I hope you're all keeping well. And we have published our results, Q3 results on the stock exchange, and we also uploaded the presentation which we are going to use for this call. In the next 20-25 minutes, together with our CFO, Ajay, we would like to take you through that, and thereafter, we would like to take your questions in that. With me in this room today, I have our CFO, Ajay Singh, and Company Secretary and Head of the Legal, Puvana, and Manashvi, Head of Communications. They're here in that. So I'm just referring to the slide numbers which I have uploaded in the stock exchange, as well as I'm also sharing with this presentation. Go to the slide number 3. So in the quarter ending December 31, we received orders worth 1,221 crores, up 31.3% year on year. This was the second consecutive quarter of double-digit order wins. From transportation, infra, utilities, and industry, customers are understanding the urgency of the pace of change needed to reach net zero and carbon neutrality. So during the quarter, we bagged a large order of supplying 500 MVA transformer and 110 EMA reactors for a bulk power transmission in the interstate green corridors that would support renewable energy evacuation. We also received multiple orders for air-insulated substations for wind and solar energy projects across the country. We continue to support the Indian Railways with our traction transformer and other offerings. During the quarter, we supplied transformers for the Vande Bharat initiative, Vande Bharat trains, and I'm glad to share that included our first order for a V-connected transformers. We continue gaining momentum in the data center and energy-intensive industries with customers seeking reliable power management and energy solutions. Commodity price increase coupled with semiconductor shortage and rising interest expenses had its bearing on our profitability during this quarter. We will talk more during that section. Profit before tax was 13.4 crores and profit after tax stood at 4.6 crores at the close of the quarter. In the following presentations, we will take you through our journey for achieving a sustainable growth in a challenging market. As you can see also, despite a high growth of orders year on year 31%, we still have almost 385 crores orders where we are L1 and got delayed. We could not complete the necessary paperwork for us to book in the last quarter. So moving to the slide number 4, sustainability through collaboration. By now, most of you are familiar with our 2030 sustainable ambition. That is, we want to be carbon neutral in our own operations by 2030. In pursuit of our targets, we achieved 100% fossil-free electricity consumption in our factories and offices in December 2021 itself. In the last few months, we extended rooftop solar electrification and off-grid solar power for our project site offices, cutting down on polluting diesel consumption. We also switched over to environment-friendly piped natural gas as fuel, replacing diesel for certain energy-intensive processes in our factories, especially in the transformer factories. We believe that green infrastructure plays a key role in the development to support the growing urban population. To this end, we conducted renewable impact studies for over 6 industry players along with the National Load Dispatch Centers for regulating usage patterns across different geographies. Such initiatives provide further encouragement for industries to use green energy for their power generation needs. Under our CSR strategy and initiatives, we provided electric vehicle infrastructure at NIT Warangal and conducted an urban afforestation drive in central parts of Gujarat as part of our CSR initiatives. Moving to the next slide, slide number 5, noteworthy steps across the spectrum. Hitachi Energy collaborates with customers, partners, policymakers, stakeholders to enable a sustainable energy future and have been progressing towards this commitment. In the last 3 months, among several orders won, we also secured orders for integration of over 1 gigawatt of solar generation capacity into the grid, and some key orders for digitalization of asset management. We also commissioned 7 substation projects encompassing AIS and GIS technologies, spanning utilities, industries, and also involving in one project a remote commissioning. As the pace of industry and government events picked up, we returned to our traditional areas such as InnoRail. We were active contributors to policy discussion at forums such as Invest Karnataka and India-Sweden Green Transition Partnership for creating safer green future. The policy-driven support for increasing the power generation capacity for renewable energy is expected to further complemented by the transmission system enabling higher rates of renewable adoption by 2030, which is encouraging for our business in the long term. Moving to the next slide, slide 6. The Indian economy, though not immune to the effects of global fluctuations and disruptions, has been resilient in the face of headwinds posed by the pandemic and the geopolitical events and war in Russia and Ukraine, etc. However, demand constraints are a major challenge amidst the current environment. Semiconductor chips shortages have further compounded these issues as supply logistics take a hit, especially during a time when industrial activity is still low. If you see, generally discussed lead time for the chips and electronics have been between 6 to 12 months. However, we need to also be aware that deliveries are rarely guaranteed. But analysts anticipate some easing of shortage by the end of 2023, considering the workarounds for easing supply chain constraints would start moving in. Retail inflation or CPI-based inflation in India witnessed a decline with various containment strategies implemented by the Reserve Bank of India to dampen it down further. Despite central banks and government's effort, the impact of inflation remained to affect the commodity price. While India continues to be one of the fastest growing economies supported by domestic consumption, the potential conflicts taking place beyord us are causing significant economic repercussions worldwide, impacting how businesses operations proceed. So, as you can see from the slide, against this backdrop, among the sectors most relevant to our business, such as utilities, transport, infra, industries, metals, mining, hydrogen, there is a steady growth anticipated in the medium to long term. Despite all these developments impacting in the short term, the horizon looks, in our view, bright, with a drive towards energy transition, creating various opportunities for our company portfolio, whether it's the product, systems, services, and software for us. Moving to the next slide, slide number 7, focus on future energy networks. I'm sure you would have seen this particular information coming out of the Ministry of Power. So here, energy projects are driving a new wave of growth across India. Among several capex focus initiatives, the government has prioritized the integration of transmission of 500 gigawatt plus renewable energy in order to bring clean energy to every household, and it is enabling the 2030 goal of achieving net zero with a comprehensive plan to strengthen the country's transmission system. This includes an estimate of rupees 2.4 lakh crore to expand its interstate transmission system (ISTS) across 26 6 states and union territories, with an additional 2.16 lakh crore needed to develop 268 gigawatt onshore renewable energy capacity and 28,100 crores for 10 gigawatt offshore wind energy capacity. Looking ahead towards 2030, when these projects are expected to come to full fruition, India is set to benefit from significant improvements in both its sustainability target and growing manufacturing muscle on the back of policies such as the interstate transmission system, transmission plan, and also the newly announced national green hydrogen policy, a commitment of close to 1,000 crores to boost manufacturing of green hydrogen production capacity of at least 5 million tons per annum, and the research and development in this area, which is also announced as part of the budget now. Ultimately, transitioning into a low carbon economy through increased penetration of renewables is opening up huge, in our view, potential opportunities for the country, which is encouraging for our business as well. Moving to the slide number 8, growth in renewables and associated transmission corridors. During the quarter ended December 31st, the order growth was driven by renewable and transmission, data center, and industry. As you can see here, it's a broad-based growth cutting across all the segments, majority of the segments, as we are also talking about in several calls now, high growth segments, which is yielding a very good result for us. Notably, we grabbed some remarkable orders in data center space, which grew more than 300% year on year during the quarter, as we develop a relationship with some of the major players in the country and dealing with the data center markets. Steps towards ensuring data security and stability across all network. With data localization, regulations are supporting the data center operators to build and expand their footprint in the country. Additionally, India launched 5G technology to further strengthen our digital infrastructure and capabilities. Energy efficiency and reliable power management for power-hungry data centers remain a concern, and we are supporting our customers with industrial power and automation solutions. Renewables and transmission continue to be very important for us. With an estimated demand of 500 gigawatt in renewable source by 2030, India is quickly transforming into one of the world's leading clean energy producers. As I highlighted before, during the quarter, we received cumulative orders for over 1 gigawatt of solar integration into the grid. In order to achieve a carbon neutral future, governments and industries are looking at decarbonizing through electrification across sectors. Along with these initiatives, Indian Railways has committed itself to target net zero emission by 2030 and has also committed to modernizing its railway network with electrification projects such as 22 into 25 kV electrification of high density corridors. Apart from the Indian Railways, looking ahead, 8 to 10 metro projects are planned to be awarded over the next 12 months for supporting economic growth with sustainable mobility solution. Given our positioning in these sectors, we are confident to bring home some orders from these upcoming projects. With all these integrated efforts underway in various sectors towards digitalization, electrification, and adoption of renewable energy as well as renewable integration, we are looking at some positive growth on the horizon supporting clean energy systems for India and also the rest of the world in that. Moving to the slide number 9, growth drivers maintain momentum. We have been talking about the growth drivers of exports and service. Given the global supply chain constraints, India holds the key to supporting this network with local manufacturing, make in India, etc. We have been sprucing up our manufacturing for meeting local and global needs. Our global feeder factories have been gaining ground around the world, helping us gradually expand our export markets. Export is an essential part with our target to contribute around a quarter of the total orders. The 11% year-on-year order growth for our products is a testament to that. Specifically, we have provided components of electric transformers for Chile's public utility, advanced industrial system for copper mines in Congo, substation equipment for Bhutan, as well as other goods throughout the world, including emerging markets such as Africa and Asia. So these are a couple of examples to showcase that how our export strategy is working very well in these parts of the world. Last quarter, we augmented our manufacturing and we continue to invest in people and technologies. Export has contributed to the growth of our engine with our product portfolio and customer service excellence. On the service side, orders were steady year on year as our life cycle service partnerships continue to gain traction, from providing first factory repairs of traction transformers to making successful GCBs, overhauling, etc., replacing third-party SCADA and controls, to rendering life cycle services orders for grid automation from heavy industry and utility customers. We have effectively provided comprehensive services in various segments. All this will help us contribute to the bottom line as well as build a strong market position for us in going forward in that. So with this, I hand over the next two slides to take us through our financial performance to Ajay Singh, who is the CFO. And I've changed also to slide number 10, Ajay. Over to you.
Thank you, Renu, and good evening to all our participants. So if you see slide 10, if you see during the quarter, the company booked orders worth 1,222 crores, up 31.3% in comparison to the same quarter last year. The revenues were 1,041 crores. The profit before tax in the quarter stood at 13.4 crore and profit after tax was 4.6 crores. Operational EBITDA stood 29.9 crores in this quarter. We continue to face chips and electronic shortages, commodity and freight price increases, and forex volatility. However, with the consistent order growth, the order backlog stood to 7,231 crores, providing us a visibility of roughly 20 months of revenue. If you come to the next slide, slide number 11, then here you see this year, while we were emerging out of the pandemic after close to 2 years, we were confronted with a myriad of interlinked challenges. And quote the UN chief from his speech at the World Economic Forum that the world is in a very sorry state. So over the last few quarters, we have been talking about the persistent changes on the macroeconomic situation, and let me take you run through this particular slide a little bit in detail. If you see the particular slide, the chart, you see the margins are fairly consistent. The material cost quarter on quarter is hovering around, let's say, 62-63% revenue mark, and the personnel cost also, I will say, is more or less steady. But if you see the chart, that is a bridge, Y-on-Y bridge on the right-hand side, it provides a true story of a credible performance in a very, I will say, a highly volatile market. Chips and electronics were leading factors impacting our profitability, and despite our reported lead times, 6 to 12 months of delivery of chips and electronics, deliveries remained uncertain and we took tough decisions on price versus faster delivery. Further to this, the commodity price, the forex, and the interest expenses, basically pulled us in this particular quarter as far as the bottom line is concerned. With a strong cash focus, we are making strategic investments in high growth segments, which we expect to help us strengthen our bottom line and cement our market positioning in the long run. So with this, I hand over to Venu for the closing slide.
Thank you, Ajay. And moving to the slide number 12, priorities for purpose-driven growth in financial year 23. The world economy is facing, as Ajay was talking about, tumultuous time. Navigating through the current chips and electronics crunch and lockdown disruption poses a difficulty. However, exports and services can still provide a good growth opportunities in addition to the domestic market. We see a good opportunity in the horizon in our high growth segments that remain central when it comes to sustainable energy recovery from the impact of market disruption. We have been working on a strategy to address the imminent commodity price increases by making sure their supply chains are flexible and adaptable enough to handle changes quickly. Additionally, we continue to remain cash focused with the aim of building our people and capacities for a greater future successes. And we would like to close the presentation and open for questions. However, before we start the Q&A, I would like to take a few minutes. I'm on the slide, and the next slide, slide number 13. You remember last quarter we were talking about hosting a physical analyst meet in our one of the largest world-class manufacturing facilities in Baroda on March 3rd, 2023, between 10 a.m. to 3 p.m. And this location is home to our transformers and high voltage factories, as well as our world-class customer experience center, energy technology experience center, and training center. So along with our management team, our global CTO also is joining this, and we will soon open for registration for you to plan your visit. We look forward to hosting you and meeting you all in person, and I would now like to open the channel for questions. Thank you.
Thank you very much. Yes, sir. Thank you. Ladies and gentlemen, we will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Renu Baid from IIFL Securities. Please go ahead.
Yeah. Hi. Good evening. Am I audible?
Yes. Please go ahead.
Sure. Thank you. So good evening, sir. I have a couple of questions. Starting first, if you look at, as in you have clearly elaborated the impact of almost 500 basis points on operating margins from chip shortages.
Can you speak close to the mic, Renu, because you are breaking in?
Am I better now?
Yeah, now it's better.
So my question was, if you see in the presentation, I've clearly highlighted 500 basis point impact.
It's breaking in.
1 second, let me try again. Is this better now?
Yeah, this is better.
You have highlighted 500 basis point impact on the EBITDA margin coming in from commodities, semiconductor chip shortages, and logistics cost impact. So broadly, now if you look at the remaining backlog that we have of 7,000 crores plus, what could be the share of those loss-making or low-margin fixed-price projects which may continue in the fourth quarter or in the first quarter of the next year, which carry lower margins? And by when do you expect the impact of these chip shortages to recede in your operating performance? So basically, when are we expecting operating margins to be back in 8 to 10% EBITDA levels?
Yeah. So thank you, Renu. I think, we, as you know, as a company policy, we don't give exactly, our forward-looking statements in that. But all I can say is that when it comes to if you really look at our bridge in the slide number 11, the bulk of that is almost 30 crores is basically on the chips and electronic shortage, right? Because we have a policy of recognizing the revenue only when the revenue happens. While a lot of our manufacturing has completed in these panels, but because of some relays not there, so we are unable to dispatch those things, unable to revenue this. While the cost has come in already, we were not able to revenue those kind of things in that. So when it comes, and this particular thing, as you know, it's a global challenge of semiconductors, which is very focused to the energy sector, especially on that. Even though semiconductors for some other sectors has really improved, but in our things we are taking a second phase, and we see a improvement on those things, but it will be at least in a couple of quarters before it will come back to the normal level what we used to see in that. So that's what is the thing in there. And when it comes to the it's a low margin. I won't call any low margin or high margin. It's always a mix, and we have once we have this revenued out, then I'm sure we should be in a position to come back to where we are planning to.
And by when are we expecting the completion of execution of these of this unfavorable mix?
No, we don't have any unfavorable mix in our portfolio as such. Okay, there are a couple of projects where we had, we have taken the orders on a fixed term basis, and those execution happened, and one or two projects remaining. I think the execution is ongoing on that. But bulk of our, if you really look at our order backlog, bulk of our order backlog has variable contracts, etc. part of that.
Sure. Secondly, you did highlight quite a bit in terms of railway transportation orders coming through, and I think that has been a high growth market for us. Now there are large Vande Bharat projects coming up for awarding in the coming quarter. So from this segment of the market, how is Hitachi positioned to garner a reasonable share of their pie? And do you think the capacity expansion which we had done for traction transformer and similar portfolio would be for this domestic market opportunity and for exports as well, or it's largely domestic centric?
So on the railway, as we have been talking about, is one of our growth segment. We have been continuously looking at opportunities and also looking at inside to expand our factories, at which we have been continuously expanding our thing. Today we have quite a major market share in local transformer, EMU transformers, or dedicated freight corridor transformers, etc. In that, the railways have announced a major tenders like a 9,000 horsepower tender, which and 12,000 horsepower, and Vande Bharat trains, EMU trains, and we have quite a big offerings in that. So each project has quite a large portion of our offerings going to that. So this is the one aspect of that, and in addition to that, we also work very closely for all the metro projects, and metro projects both we do the trackside solutions like a grid integration, etc., or the wayside transform, and as well as the SCADA systems. So there are very big opportunities are there. As the railways have announced a large number of local trains, we are now also looking at further expanding our transformer capacity.
Thank you. Ms. Baid, the request you to join the question queue for any follow-up. Also, before we take the next question, I'd like to remind our participant to limit a question to 2 per participant. If time permits, you may join the queue for any follow-ups. Thank you. The next question is from the line of Mahesh Bendre from LIC Mutual Fund. Please go ahead.
Hi, sir. Thank you so much for the opportunity. Sir, what we have indicated is that there was a production loss because of the lack of availability of the chips and the other parts. So what was actually a production loss that took place at a sales level? If these things had not come, then what would have been impact on the delivery side?
Yeah, you can see that in our this thing. So we have a revenue loss up to the extent of 100 crores.
So correct.
Yeah, Ajay.
Yeah, fine. So thank you for the question. So in this particular quarter, the impact basically on account of chip shortage is roughly approx 100 crores we got impacted. And because of, if you see in the bridge, roughly 31 crores is the impact on the bottom line. So if you would have not had this, probably there would be roughly in the range of 2 to 3%, margin would be on the upside compared to what we are having right now.
At the PBT level.
Yeah, PBT level.
Sure. And sir, second thing is that, the logistic cost is also, we mentioned, one of the reasons why our profits have gone down. So what we have observed typically now is that most of the companies that are declaring the results, they are actually benefiting because of the logistic price have actually gone down on a year-on-year basis. So yeah. I'm just trying to find.
Yeah, here is what we are talking about is the logistics cost is. Basically, we are talking about the export logistics cost, especially as we have, you see, as part of our strategy, we have increased our exports over a period of time. The export freight cost has really gone up substantially in many parts, and some of the things we are time bound. We have to ship those things in a time bound manner. So that's where is our logistic cost is coming. While you are true, that domestic transportation cost is in the same level or slightly last year levels.
No, I mean, on export side, we are hearing this from companies. They're benefiting and they're showing that the export cost is actually, I mean, transporting the international cargo has become cheaper compared to last year. So there is a drop of many companies are reporting in the logistic cost. So we are, I mean, exactly opposite to that.
We can't comment about others, but we have been also using many of these logistics is our global contracts, so we have a very effective system. So we have, yeah.
One thing basically, what you are telling is correct. So if you see a Y-on-Y basis, this year it is quite visible. But you are right. If I go quarter on quarter, probably the impact has come down. But if you see from Y-on-Y, the bridge we are talking about is Y-on-Y. There still, what Venu is telling is, talking to on those lines actually.
So this bridge, what you see in the slide number 11 is basically Y-on-Y.
Thank you. The next question is from the line of Varun.
Hello?
Yes, sir.
Can you hear me?
The next question. Yes, sir.
Yeah. No, Mahesh has listened to us. I'm not sure.
Sir, I want to ask something.
Yeah, sure. Go ahead, Mahesh.
Sir, when do you think then the situation will normalize now? I mean, when chips available and the execution will pick up?
This was the same question previous person also, Renu was asking about it. While all the actions are there to see that the situation improves, so we have taken several actions just to narrate. Not only talking to the existing manufacturers, but also looking at alternative suppliers. At the same time, we are also looking at slightly modifying the design of our product so that the existing available chips can do that. It's not that all the chips are not available. There are, if you look at, give an example, we need thousands of components to make one particular relay, which is the very heart of the power system, right? In that it goes hundreds of components, chips require in that. So we may be getting 80%, 90% of that, but in the last 10, 15%, we are having a problems. So that's the reason all the actions are there. We see definitely signs of improvement. Okay, so earlier the lead time was 6 to 12 months, and also not guaranteed that those lead times that we are able to get those things. But today the lead times are becoming slightly better, I would say, and then we are having a direct contact with not only our suppliers but also the end chip manufacturers as well in that. At the global level, we are taking all the actions to see that whatever we plan, we are on top of that, we are placing advance orders at least 1 year ahead of the curve. So all these things, in our view, should help us to normalize in couple of quarters, couple of quarters, progressively.
Thank you. The next question is from the line of Varun Basrur from Julius Baer. Please go ahead.
Good evening, sir. I hope I'm audible.
Yes, Varun. Very good evening.
Yeah, thanks. So, first thing is, has there been any penalty that's been imposed for short delivery or for short execution? I don't see anything in that PBT bridge on the slide 11. And second thing is, if I see the cost. Hello?
You're talking about the LDS, eh?
Yes. Any penalty or any LD, liquidated damage, anything that has been imposed in the current quarter?
No, not to any of the LDs are not there. As you know, we have been very proactive with our customers, engaging with them, ensuring that they understand the situation. We are notifying them well in advance. So, and we are very close to them to see that we find a workaround solution wherever customers are urgently commissioning something like that. So taking their existing installations to do that. All those actions are enabling us to be close to the customers and not to levy any penalties at this point in time. Because this is a force majeure. This is a force majeure. It's not of a delay of any organization or something like that. And customers do recognize. We have notified all the customers saying that this is a force majeure, and they need to realize and recognize the contracts of the conditions of the contract.
Okay, thanks for that. And second question is, if I see the the interest position, it has also increased. Whether it's year on year or quarter. I'm assuming that part of this is higher inventory. Has there been any other increase in either working capital or debt? Can you say what is the net debt position?
Yeah, Ajay.
Yeah, so the increase in the interest expenses is primarily on these bank loans, that we have taken during the particular quarter. So as you know, the interest rates now, it has increased. Right now, it's hovering around 7% per se. So that is one of the major, reasons where we see there is an increase in the interest rates. Other than that, I think it's more or less streamlined.
The debt level.
And the debt level, if you see, currently the debt level of our company has come down. So last quarter, we had closed at 315 crores. So now we are at 275 crores. So that way it has come down. But during the quarter, because of the movement of the working capital requirement, that is what is basically there is an increase in the interest expense.
So this 315 is net debt or it is gross debt?
315 is basically the net. If you talk about the net, it's 150 is the balance. If you're talking about net debt, 150 is the net balance we are having. Because we are having a balance of 150 crores and our debt is around 275. So you can say the net is hovering around 150.
Okay, thank you.
Thank you. The next question is from the line of Sarakshit Kandapal from HDFC Securities. Please go ahead.
Hi, sir. Since on a decent quarter. So my first question is on the railways segment. So besides beyond this traditional railway segment, the new segment which is coming up in 9,000 and 12,000 HP and the Vande Bharat. So how big a market it opens for us, if you can quantify in terms of prospects there, and what will be the products and services which you will be bringing in?
Yeah. I think if we are talking about around 5 projects of recently the Indian Railways have announced 8,000 horsepower, 12,000 horsepower, Vande Bharatam EMU train sets. All put together, our accessible market is anywhere between 4,000 to 4,500 crores. And what we are supplying basically in this is we're talking about a local transformer, and that's our major play in that.
So you say about okay. So out of the 1 lakh crore of ordering which is expected, about 4,500 to 5,000 crores will be our addressable market, right?
Yeah. So I'm not sure about 1 lakh crore. I'm talking about the five projects, which basically includes 9,000 horsepower, 10,000, 12,000 horsepower, EMU trains, etc. This does not include high speed. This does not. What I told you does not include high speed rail. Does not include metro stations. Does not include cross country. Those kind of projects in that.
And this will get finalized in the next 1 year, sir?
Yeah, this is progressively. I think the OEMs are bidding for it, and it will get finalized in the next 1 year or so.
So you will be providing the support bid to the OEMs. You commit a support bid, or once they get the tender and then they'll call directly the OEMs will award it to you on a competitive basis.
No, we are as we speak, we are providing our offers to the OEMs because they need to take our offer as part of the design parameters.
Okay, because recently Siemens wins. So are we part of the Siemens win? With Siemens got this 9,000 HP. So have we given any support bid to them?
We don't comment on a specific project, but for all the OEMs, we have been actively in discussion.
Okay, great, sir. So my second question on this Kudus-Mumbai corridor project. So any update on the executions? Where are we? I think last time we were on the design stage. So when do we see the revenue start kicking in? If we can give some sense on that order.
As I told you, these are the large projects. Normally, the deliveries are in the range of 40 to 45 months, and the first 15 months or so, it will be used for the design and doing the studies, etc., power system studies, and then a lot of approvals, engineering, and simulations, etc., will take place. And then the construction will start now soon, and thereafter we see that by end of middle of next financial year is what we start seeing the revenues kicking in.
Thank you. A reminder to our participants, please press star and 1 to ask a question. The next question is from the line of Venkatesh Subramanian from Logic Tree Investment Advisors. Please go ahead.
Good evening, sir. So my question is about the next 3 to 5 years.
The handset, please.
Sure.
Sorry?
My question is in terms of the opportunities. If I run through the presentation and when we look at what you emphasize on in terms of 2030 vision of India renewable energy, broadly, if I take a 5-year view on Hitachi Energy, what is the kind of broad growth rate that we can look at? So some sort of a guidance, and how much of that would be service revenues as a percentage?
No, I lost you in between, Venkatesh.
Yeah.
You're breaking it.
Yeah, my question is, I broadly understand the vision of where Hitachi Energy India is going over the next 10 years. It's a decadal long call, in which if I split it into 5 years and 5 years, over the next 5 years, what kind of growth in terms of top line can we expect approximately over the next 5-year period? And what percentage of that would be service revenues, sir?
Yeah. So I think, Venkatesh, very good question. So let me just put it instead of top line. Let me just decode your questions in a twofold. One is that orders. So if you really look at our orders, what we are talking about, the market is growing at X percentage. We said we'll grow higher than the market. So this has been our strategy. And if you really look at our 9 months cumulatively orders, and we have been at least more than 100%. More than 100% we are growing on the orders. And we are in a long cycle of converting orders into the revenue. So revenues will follow after some time, right? In that. So that's exactly one thing. Our strategy on the securing the order pipeline is we want to grow faster in the market. If the market is growing X, we want to grow higher than X. And that has been consistently we are demonstrating for last several quarters in that. So that's number one. So what are other growth areas? So one, you talked about the service. We also said exports. Export is 1/4 of our orders will come from the export. So which is also orders are, we are able to demonstrate that almost in the range of 20 to 25% orders per each quarter we are getting from the exports. And in the couple of quarters down, which is also reflected in our revenue mix on that. And the third one is service. We also said in one of the calls that service order potential what we have is a 2,000 crores in that. So we have right now we have a high single digit as part of our service. So our plan is to take it to the double digit over a period of time. So this is how the broad growth strategy, which is a broad based and taking care of both domestic market, international market, and our huge install base of service, which we would like to leverage in that.
Fine, sir, I understand. I think, so is it fair to assume that if the size of the opportunity is going to be fairly high over the next 5 to 10 years, our growth rate top line should broadly be in double digits somewhere?
Sorry, again I missed you. You lost you in between.
No, I'm trying to figure out that if the market is growing at X percentage, so if we believe that the market is going to grow in a double-digit growth rate over the next 5 to 10 years, we want to exceed that. That would be the right assumption, right, sir?
Absolutely. You are absolutely right.
Okay, sir. Thank you. I'll come back.
Thank you.
Thank you. The next question is from the line of Mohit Kumar from DAM Capital. Please go ahead.
Yeah, good evening, sir. Congratulations on a very good set of order inflow. So my first question is you spoke about making strategic investments. So what are the kind of investments you are making over next 3 to 4 years to grow the business? In which products and which segment? And the capital expenditure, if you can put a number to that over the medium term.
Yeah. So thank you for your question. I think we have been consistently saying that Hitachi Energy India is one of a key market, not only for the market but also using our existing manufacturing base to not only cater to the domestic market but also the export market and the rest of the other things like that. So this has been our consistent strategy, and then we are also living up to the strategy. If we really look at in the last 3 years, including COVID year, we continue to expand. We built up a new factory for power quality in a greenfield factory in power quality in Bangalore, and we also set up a dry bushing factory in Baroda, and we expanded our feeder factories, and we continue to expand those kind of things. So today, more than 80% of our global portfolio, we manufacture here locally. So the reason for that is that we want to be competitive here, we want to localize the products here, and we want to increase our skill sets, not only for the domestic market, but increase the market. So in the last 3 years, on average, on the last 3 years, we spent around close to 300 crores in the capex, and we believe that that will continue to be there in the coming quarters. We are looking at expanding in our traction transformer facilities to cater to the new demand coming out of that. So those things will be as part of our strategy going forward. We continue to expand the new growth opportunities arising out of the transmission system, DC, etc.
Understood, sir. Second question on the slide number 6. You are talking of 40% increase in production. Is that pertaining to electronic supply? Is it?
Which one? Which slide you are talking about?
Slide number 6. 40% increase in production. What does this signify?
Slide number 6. I must say. Semiconductor.
Semiconductor, right? Yeah. Understood. The last question, sir. Do you see intrastate?
Slide number 6. Just want to clarify that 2023 sees a more than 40% increase in the production of semiconductors, not our production. It is what we are talking about is the industry there.
Understood.
Semiconductors. So how we are going to come out of this is we also got the feedback from the industry that they are also increasing the production of that particular areas.
Understood, sir. So last question, sir. Of course, you spoke about interstate transmission capex going up to 2.4 trillion. Do you see intrastate transmission picking up, and what are the kind of offerings we have in the segment? Is that offering different from the interstate capex?
Yeah, we have absolutely. This is very important, and this is our core of it. Interstate transmission things includes HVDC, include FACTS, includes STATCOMs, and includes 765 transformer, includes 765 transformers and reactors, 765 AC transmission. So all these things is part of our offerings over there.
What is the intrastate, sir? Intrastate capex?
Sorry?
Intrastate within the state capex, intrastate capex?
Within the state, as you know, some states are going up for the expansion of 400 kV substations, 220 kV substations. So that is also part of that. But then like HVDC projects, what we are talking about, that is primarily for ISPS.
Thank you. The next question is from the line of Priyank Chheda from Vallum Capital. Please go ahead.
Yeah, hi. Thanks for the opportunity. My question is regarding the transmission project of Leh Ladakh. Is at what stage, and in case Hitachi goes for it, what can be the opportunity for the Hitachi? That's first question, sir.
Yeah. So thank you for a very nice, interesting question. In fact, I was expecting this question. As you have rightly said, this is a very important thing, and if you have gone through the recent budget announcement, so the budget has provided 8,300 crores grant for this particular project. So, okay, so this was actually the whole thing was waiting for this particular thing, and we believe that this will help us to accelerate this project for for both HVDC and all of the things. It's quite a big opportunities for us, and right now we are working on this to look at various things, including manufacturing those big projects.
So, sir, the bids are out for this project, and
bids are basically there's a consultancy bids have been asked for it, which we have submitted. But the main bids, in our view, is that now that budget has given the grant, and after that it will accelerate now.
So you mean that this project should be fructified in the current year? Coming year, yeah. And so on overall HVDC order pipeline, if you can brief us on that, because we had envisaged of winning at least one HVDC project every year. How do you see this faring up?
Yeah. So absolutely. So we have been talking about previously that India is to have one HVDC project for every 5 or 6 years, and we said that we envisage 1 year per year, which is in line with our envision and line with our thought process is coming out. Now we see that one project is already awarded last year, and now in addition to the Leh Ladakh project, we also see a project of Khavda is coming up, and then another project is also coming very clearly. So 3 projects as we speak is in a very active stage of about to come for a bidding.
Okay. And last question. In the last call, you had alluded about the royalties fees coming down from the current levels of say around 3.5%. If you can help us, where are we in that process, and what can be the percentage royalty that we should be paying over the coming years?
Yeah, I'm afraid I don't think we have said that it will be coming down, but let me just give you an overview, and then Ajay will talk about the percentage. As you know, the whole ecosystem of energy transition is really shaping in a very big way. So that's exactly then why we organized this analyst meet in our factory on 3rd of March. If you could take some time to attend it, then you'll understand how this is transforming in a big way. This needs a lot of investments in the technology standpoint. This needs a lot of investments in the R&D, innovation, etc. to bring those technologies latest up to date in that. It needs investment, and we believe that by paying the royalty, we are accessible to this latest state of the art technology to be able to support our customers in India in that. So over to you, Ajay, on the percentage.
Yeah, so on the percentage side, currently if you see our royalty expenses has been hovering between a range of 3.5% to 4%. But as we speak today, currently we are at that level of 3.5%.
Thank you. The next question is from the line of Anish Jobalia from Girik Capital. Please go ahead.
Yes, hi sir. Good evening. Thanks for the opportunity.
Anish, your voice is breaking. May I request you to use the handset?
Yeah. Am I audible now?
Hello.
Yeah. So thanks for the opportunity. Good evening, and thanks for the opportunity to speak to you. Sir, so my question is, you mentioned about 100 crores of revenue, which we were not able to book.
Not very clear. Please use
the
handset.
Yeah. Is it better now? Hello.
Yeah, go ahead.
Yeah. So my question is, sir, we spoke about 100 crores of revenues which we are not able to book in this quarter. But if I were to add that 100 odd crores, so we are still flat versus the last quarter, which is Q2 FY23 as well as Q3 of FY22. And what I'm understanding is that typically our execution in the second half.
Anish, please use the handset.
No,
Hello.
I understand.
Yeah.
100 crores. I didn't understand you. What?
Am I audible now better?
Now it's better.
Okay, so there is that you mentioned about 100 crores of revenues being lost in this quarter. But if I were to add that back, to Q3 numbers, so we are still flat versus the last quarter, which is Q2 of FY23, as well as Q3 FY22. But my understanding, and as I see from the numbers, like typically in H2, our execution is better than H1. So how should we think about, what could be the other factors which have led to the revenue being, much more benign than as compared to the order inflow growth that we have already seen in this first 9 months?
Yeah. So I think Ajay will also add to this. As you can see, if you add 100 crores, so we would have been 1,141 crores, which compared to the, we are in the range of 4-5% growth. Okay. So, but that's not the only one. There are also other constraints, etc. We have also very robust, revenue recognition policies, especially on our imported items. All those things have contributed, I think in that. So project specific, for example, in those kind of things. So all these things in our view in that. But as you say, if you really take a 9 months to 9 months, and then you can see our revenue, we have a growth of 13%. Okay. Yeah, it is definitely not at the same level of order growth, but as I told you previously, so there is always a lag from our converting order into the revenue. So that is a couple of quarters over there in that.
Okay. And my second question, sir, is that, we have been continuously now seeing employee benefit expense of 100 odd crores, and then there is other expenses of 230 odd crores. So is it possible for you to define, quantify how much of this, say, 330 crores is fixed in nature, and how much would be variable? Like, I'm not talking of the other charges which are subcontract and the cost of raw materials, because they are obviously variable. But within this, it would be great if you could quantify between the fixed and the variable expenses.
So here, basically, as you rightly told, employees' cost mostly which is in fixed in nature, that we can say. But other than that, I will say royalty and the group charges, that is more fixed in nature. Only variable portion will be basically the freight and the power and fuel, that is totally dependent upon basically the volume that we do. And to some extent now that we have increased in the traveling and services from the third party is one that is basically there. And on top of it, the exchange rate fluctuations also is which I will say are variable. Other than that, more or less, I think it is consistent.
Okay, sir. And if I can just squeeze in one last question. So I think we are looking to develop, we pay some infrastructure fees, IT infrastructure fees to our, ex-parent, which is ABB India. So I think we are developing our own, technology and reduce the dependence on ABB India for, and not pay that particular IT fee. So where are we in the journey for, that particular expenses actually trickling down to our profitability level?
So here, let me take this question. So here on this IT part, yes, we are running a transformation project that is currently running, and we are working on the S4HANA, we call it, upgradation of SAP system. So right now, we are in the mid of this journey, and for some of the IT, services which are taking from ABB, we are having this PSA, we call it a transactional services agreement, which we think, that it will continue till this year end. So our target was to close this as early as possible. Maybe in this particular year only, we are trying 2023 should be the year where we should come out of this, as we are progressively building our own infrastructure, and we are quite ahead in that particular direction.
Thank you. And maybe operator, you take one last question.
Sure, sir. Thank you. The next question is from the line of Renu Baid from IIFL Securities. Please go ahead.
Yeah. Hi. Thanks, sir, for the opportunity. Just wanted your perspective and developments on the penetration of the industrial automation solutions and that we were doing through Lumada platform. So any developments or numbers to share in terms of penetration with the existing installed base that we have in this segment of the business?
Yeah. So, Renu, thank you for the question. As you know, ever since we become part of the Hitachi, so we are looking at the synergies between Hitachi Energy and Hitachi, and you know that Hitachi has invested on quite a big amount of thing on the Lumada platforms. Lumada, one of the leading IoT platforms. So we started offering our our enterprise software solutions on Lumada platforms in that. So we also been talking about various. We are doing a lot of pilots in the major industrial customers as we speak, and we are getting what we call couple of wins on every quarter, as I talked about in my highlights. You can see some of them we got it. But at this point of time, as we speak, our digital offerings are high single digit at this point in time. Okay, so it is taken off even though it's a low base, but it's a single digit offerings in that. But we see a lot of opportunities, a lot of synergies with the various customers, several pilots we are running with them, co-creating the various opportunities.
Thank you. Ladies and gentlemen, that would be our last question for today. I now hand the conference over to Mr. N. Venu for closing comments. Thank you, and over to you, sir.
Thank you, Aman, and ladies and gentlemen, thank you for your keen interest and taking your time from a busy schedule and attending this call and asking us questions. And as I told you that we are really looking forward to host you on 3rd of March in our state-of-the-art manufacturing facility to take you through. Primarily, this call is to take you through how this power systems and the various elements of the systems are evolving it, and how Hitachi Energy is getting ready in this big transition phase in that, especially on the technology standpoint in that. So with that, thank you and take care and have a nice weekend.
Thank you very much. Ladies and gentlemen, on behalf of Hitachi Energy India Limited, that concludes this conference. Thank you all for joining us, and you may now disconnect your lines.